Welcome everyone to Vested Interest. This is Shane. We are going to take a look at the 5 stocks I'm looking to buy if they enter fair territory for the month of February, and one ETF. That's right, one ETF. I may or may not be adding to my portfolio. Really, it is one that I think if you are not an individual stock investor and you are looking for something a little simpler, that you can do a hands-off approach, this is the ETF I would recommend. And as you can see right here, the stocks we're going to be taking a look at are Intel, Kroger, Pfizer, Union Pacific, and Procter & Gamble. Before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. And for those of you who may not be subscribed yet, if you like videos like this, looking out at stocks I'm looking to add to my portfolio, watch a portfolio be built out. I do stock updates every Sunday. I also do a series called the Stock Pick of the Day, where I look at a stock that maybe has pulled back on the day and is entering fair value, or that I'm watching to see if it does enter fair value. So again, if you're interested in dividend growth investing and in topics like that, go ahead and hit that subscribe button down below and join me on this journey to financial freedom. And if you have not started your own journey, I do have a Webull link down below. If you're looking to open a brokerage account and you use that link, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. You don't have to use it, completely up to you. You don't even have to use that brokerage account. My main brokerage account that I review on this channel is actually in Ally Financial. There's plenty of other ones out there, Fidelity. Almost every bank now has a trading platform. Just make sure you are not paying any fees for your trading. If you are, find another brokerage. All right, with that said, let's jump right into the video. First up, we are going to take a look at Union Pacific. So we've got quite a bit of information on this page. What we're going to do is we're going to take a quick run through the stock. We're going to look at the dividend payout over here. I do have a position. If I do, we'll cover my position and where I'm looking at for an entry point. So we're talking about Union Pacific, ticker UMP. They're out of the industrial sector, right? It is a railroad company. And as you can see here, 52-week range as low as 183.70, as high as $278.94, and it is creeping down closer to that 52-week range. Market cap of 124.43 billion, a beta of 1.14, so they are more volatile than the overall stock market, just slightly. PE ratio, not terrible on this one. It seems like they always got a higher PE ratio typically, but 18 is not bad, 18.05 on the price to earnings ratio there. Earnings per share, which is what EPS stands for, is $11.21. Very nice. Next earning date coming up will be April 19th through the 24th. Has a forward dividend of $5.20 paid out on the year. Divide by 4, it is a quarterly payer. You can see that over here, quarterly payer, and they pay $1.30 per share, right? With a 2.57 dividend yield. So not a terrible dividend yield. This is in line with most ETFs, around 2.5 to 3%, a little over 3% maybe. So right in line with the overall market. Ex-dividend date, the last one was December 16th. Looks like they paid out on December 29th, so have already paid out their last dividend. If you did buy them today, you would be in line. Just make sure the ex-dividend date, yep, haven't hit their ex-dividend date yet, so you would be in line for the next dividend. And a one-year target, at least according to Yahoo Finance, where I pulled this information from. This is from Yahoo Finance, this chart and everything here. And then this is actually from stockanalysis.com, another site that I like to look at. Always recommend more than one site to look at your information to make sure the information you are getting is accurate. Now, some of the things I'd also like to bring your attention to, they do have, this is more for traders, right? You're looking for patterns on the charts. This is a chart that they are saying shows bearish. So that means that they expect the price to come down here over the next short term, 2 to 6 weeks, midterm, 6 weeks to 9 weeks, and the long term, they think it will go back up, right? They also estimated fair value for their fair value is it's actually 4% above what they consider fair value. So for me, on this one, what I'm looking at, since I do have a position, well, let's cover a couple other things first before we cover that. The payout ratio is a nice low payout ratio, below 50%, 44.2% payout ratio, and very nice dividend growth at 18.41%, right? So I don't mind the lower dividend payout here at 2.57%. If I get this type of growth. That's very nice growth to see. Now, again, I do have a position. I have 10.128 shares in this. Right, my cost basis is $198.23. So I am actually looking for it whenever it drops below my cost basis. I'm looking to add it, and I think it's getting close, right? 202, so not quite there. But when it does, and when it presents an opportunity to below this 198.23, I will look to add this to my position. or add more shares to my position. All right, so that is Union Pacific. Let's jump over to the next one. This one is going to be a little bit controversial. I know they really missed earnings. They really dropped over the last couple trading days there, Thursday and Friday, down I think 8% one day and another 6 or 7% the next day, right? So Intel is going to be, I know, a little controversial, but it is one that I believe in long term, and I'm a long-term investor. So I'm going to take advantage of short-term volatility, even if that short-term volatility lasts for a year, right? I'm looking for this turnaround in 2 to 3 years out. I'm not looking for it at the end of 2023. I'm looking to continue to add to my position throughout 2023 and maybe even further if it stays low, and build out this position and continue to add to it, and then wait for the turnaround, right? Collect the dividends along the way. But anyways, we are talking about Intel Corporation, ticker INTC. This is out of the information technology sector, $28.16, right? They have a 52-week range as low as $24.59, as high as $52.51, and they are definitely closer to that 52-week low. And I don't think they're going to be closer to this 52-week high anytime soon, which is, again, why I'm taking the opportunity to build out the position. A market cap of $116.498 billion, a beta of 0.76. So even though there was a lot of volatility at the end of last week, they are less volatile than the overall market. Price to earnings, PE ratio of 8.72. Earnings per share, EPS, is $3.23. Next earning date is April 26th to May 1st, right? A lot of these companies have already given out their earnings for this first quarter, so this will be next quarter's earnings. Dividend over the next year payout is $1.46. They are a quarterly payer, 0.365 cents per share, right? And they have a 5.18% dividend yield. So very nice dividend yield, anytime over 5%. And they have, for those of you who may be worried or concerned about this dividend yield, since they are having some revenue and financial problems and doing a significant amount of investing right now, which is also impacting their free cash flow, they have stated in their last call that they are committed to maintaining the dividend. Now, that doesn't necessarily mean that they may be increasing it in the future. They may put a pause on that, but they're at least committed to paying the dividend and not reducing the dividend at this time. So that 5.18% I would say is safe for now. They have quite a bit of free cash flow and cash on hand. Ex-dividend date, their last one was November 4th. So ex-dividend date, they did pay out on December 1st. So this is another one that if you bought them now, you would be in line for their next dividend. And according to Yahoo Finance, where I pulled this up, they have a one-year target estimate of $30.13. Now, their payout ratio is right up against my level that I look at. I look for 75% below, unless it's a REIT or a company like that that has to pay out a higher amount of their business development company, BDC, something like that, that typically pays out 90% plus of their dividend. And dividend growth is 5.04%. So very nice dividend, not super aggressive growth here, but 5% growth is very decent. Again, this is one, though, that I would not be surprised if maybe this growth went down even or was paused for a while. Now, I am long Intel, right? I do have 144.625 shares. My cost basis is $27.91, so same thing. I am looking to buy anytime it dips below this $27.91. That's where I'm at with this one. If it's below my cost basis and I can reduce my cost basis, increase my yield, and increase my potential future return, that's what I'm going to do. And hey, for those of you who like videos like this, like I said, go ahead and hit that like button. Give me a thumbs up. Share it with anyone you think that might find value in the content. A little tongue-tied there. Drop a comment down below. Let me know what you think. Let me know what you think in Intel. Is it one that you like? Is it one you're avoiding, right, because of the problems that it has right now? And definitely, most importantly, subscribe to the channel. Join me on this journey to financial freedom. All right, so that is Intel. That is where I'm at. Again, under $27.91. Let's call it $28. Really is where you're at. So, or where I'm at. All right, next one up. Procter & Gamble, another one that might be a little on the high side, just looking at the PE here real quick, but let's run through it. Procter & Gamble, ticker PG, $140.57 as of the close of business on Friday. All right, and Procter & Gamble is out of the consumer staples sector. A lot of products sold by Procter & Gamble. This is one, again, that usually trades at a higher PE. Usually trades for a premium, as they call it. You might pay a little more for a better company. Procter & Gamble sits underneath those, but we always want to try to get them at fair price or as close as we can as well. So this one, same thing, 52-week range, as low as $122.18, as high as $164.98, right? So definitely creeping closer to that 52-week range, but still mid-bound, I would call it, in between the two. Market cap of 331.624 billion, a beta of 0.43. So this one is less volatile than the overall market, right? That's what beta means, the volatility of the market. A 1 being the market, anything above 1 being more volatile, anything under 1 being less volatile. PE ratio is a bit elevated on this one, 24.66. Earnings per share, EPS, is $5.70. Earnings date is going to be on April 20th. The forward dividend is $3.65 paid out on the year. It is a quarterly payer. It does pay 91.9133 cents per share. It has a 2.6% dividend yield. So decent dividend yield, 61.6% payout, 6.16 dividend growth. Ex-dividend date was January 19th, so if you bought them now, you would not be in line for their next dividend payout. And their one-year target estimate, at least according to Yahoo Finance, is 154.71. So again, I'd like to bring you down here, right? They're calling it a bearish pattern, so they're expecting short-term downtrend over the next 2 to 6 weeks, 9 to 12 weeks, and even over the next 9 months. So they are potentially thinking this one gets hit if we hit a long recession, right? Now, quick look down here. Again, another one I'm long on. I do own 13.208 shares. I would love to build this position out further. And I am really looking for anything, excuse me, below $135.18, right? I am up a little bit on this one. I'm up on quite a few of these positions, but I'm looking for it to drop back down so I can add to it under my current cost basis, increase my yield, and increase my potential future returns. So that is Procter & Gamble. And I'm hoping they're accurate, right? I'm hoping that this bearish pattern that they've detected is right, and their performance outlook is, runs sideways or even comes down, so I can dollar cost average down on this one. No skin off my back. That's what I'm looking for. Next up, we are going to look at Pfizer. Now, this one is not currently in my portfolio. It was in my portfolio at one time. I was buying it in the mid 30s, low 30s to mid 30s. And I sold it at a profit, I think around 48 to 52, somewhere in there. So this is one I would like to get back into at the right price. So we are talking about Pfizer PFE out of the healthcare sector. 52-week range as low as $41.45, as high as $56.32. So another one that is creeping back towards its 52-week low. That's where I like to look at them whenever they get close to their 52-week low. Close to their 52-week low. Then I start keeping an eye on them to see if they'll get, down in my buy range. Market cap of 245.807 billion, a beta of 0.63, so less volatile than the overall market. Price to earnings of 8.39, earnings per share of $5.22 per share. Earnings date is going to be January 31st, so coming up here this week. Forward dividend is $1.64. They are a quarterly payer, right? They pay 40 cents per share. They have a nice dividend yield at 3.75%, and obviously if you got them cheaper, that yield would be higher, right? The yield is inversely correlated. So when the stock price goes up, the yield goes down, vice versa. When the stock price goes down, the yield goes up, right? We're looking for higher yield. That's what I like. So the cheaper you can get them, the higher the yield is. That's what we want. All right, ex-dividend date, January 26th. So we are past that one. You would not get the next dividend if you bought them now. And a one-year target estimate of $54.97, at least according to Yahoo Finance. So speaks to some upside appreciation potentially, right? 29.9% payout. Slow growth here on this one, though, 2.56%. I would like to see that a little higher. And this one has a neutral gap down, right? That would actually tell me maybe it's just going to slide sideways for a little bit or maybe even go down. They have a 2 weeks to 6 weeks downturn, 6 to 9 downturn, and long term over the next 9 months they think will be down. So another one they believe may be impacted by the recession that we are currently in, and they say the fair value is 2% over fair value. So if you got this one, for me, this one under 42, I would say, right close to that 52-week range. And to be honest with you, I wouldn't mind this one dropping down through its 52-week low, setting a new 52-week low in the high to mid 30s, right, somewhere in there. I would love this back in the mid to high 30s. That would put the yield probably a little over 4, and that's where I would really, really like this one. But I might add this. If it dropped down below 42, I would probably look to add this back into my portfolio. So that's Pfizer. I believe this is the last individual stock, another one I do not have a position in. I did have a position in it. I was buying this one, same thing, 2 years ago back in the high 20s, rode it up into the low 40s and sold it there for a little bit of profit to offset some of the, yes, baby? Okay, what do you need?
Snake.
You broke it again? Here, bring it here. Let me see it.
Not broken. It can be.
Well, it is broken, but I've got to fix it. Here, hold that. All right, let me see this. And you need to brush your hair. Did you brush your hair? Okay.
Cold out here.
It is cold out here. Here, there you go.
Shouldn't you have a heater?
I have the heater on. What do you say?
Get another one.
What do you say?
Get another heater.
Thank you. Love you.
Okay,
All right. Hey, call him back inside. Sorry, I'm having some family issues, technical difficulties. Odin, inside. Thank you, Callie. That was my youngest. She breaks the stand on her iPad sometimes, so I have to fix it. Apologies for the delay. Not sure. The Kroger Company ticker. Let's jump right back in. Sorry. Let me compose myself. The Kroger Company ticker KR, another one out of the consumer staple sector, right? Closed out the day at $45.05 on Friday. It has a 52-week range as low as $41.82, as high as $62.78. Another one heading back towards the 52-week low. At least it potentially may be heading back there. Was recently lower than where it closed the day out, but that's all right. Market cap of 32.248 billion, a beta of 0.50, so half volatile as the overall market. PE ratio of 14.17. Earnings per share is $3.18. Last earnings date was December 1st, 2022, so it's not showing the next one coming up. Forward dividend is $1.04 paid out in the year. It is a quarterly payer, pays 26 cents per share, and a 2.31% dividend yield. But again, another one, 26.7, very low payout with a high dividend growth. Another one, I don't mind the lower dividend yield if it has higher dividend growth like this. Ex-dividend date will be February 14th. And the one-year target, at least according to Yahoo Finance, where I pulled this information, is $53.42, which speaks to some potential upside appreciation. Another one that they see as bearish. They feel it's 4% overvalued right now, and they look at it downtrend over the next 2 to 6 weeks, 6 to 9 weeks, or 6 to 9 months, 6 weeks to 9 months, and long term, 9 months plus, they see it back above where it is now. So this one, again, may be hit short term, but they see a turnaround at some point, which is what I'm looking for. I like to hit it whenever they're in a downtrend so I can accumulate shares, cheaper prices, even if I dollar cost average down, and then ride it back up, right? That's the idea here. This one, same thing. I would probably be interested if this dropped back below $42. I would probably look to add this one back in and try to build a position. And again, I probably would not add both of them back in. I would take a look at them at the time and see which one makes the most sense for me. But Kroger and Pfizer are two that I am watching for potential adds back into my portfolio. So those are all the individual stocks. And next up, yes, I am going to talk about an ETF. So I know I have said this on my channel before, and I do feel this way, that I do not have any ETFs in my portfolio. I can pull up this ETF and look at the top 10, 15, 20 positions, and I can create my own ETF. But I don't mind looking at the fundamentals of companies. I don't mind looking and making sure their revenue is growing, making sure their margins are decent, making sure that they aren't getting over leveraged in debt, making sure that they aren't diluting me as a shareholder by issuing more stocks. And if they are, that the stock price and the dividend is offsetting that, right? That the free cash flow is growing, that so that it can cover the dividend, that they are not getting too high in their payout ratios, right? So I am looking at all these on the individual stocks. If you do not want to do that, if you just want I want to buy an ETF, or I want to buy a basket of ETFs, this is one ETF that I would recommend. It has a similar dividend growth philosophy that I invest in. So it's similar in the nature that they invest in what they're looking for in their dividend stocks that they hold in their portfolio. But they do all the investing for you. They do they do charge you a small fee, which we'll go through that here in a minute. But this is one that I would recommend for those of you looking for an ETF. All right. So we are going to look at the Schwab U.S. Dividend Equity ETF, ticker SCHD. Closed out the day at $76.36 last Friday, right? So this one, 52-week range, as low as $65.96, as high as $81.01. So to me, it is really closer to that 52-week high than it is to that 52-week low. So I would look for it maybe to pull back a little bit. right? But if the stock market continues on the run that it's on, it's probably not going to do that anytime soon. Unfortunately, they didn't give me an indicator on this one when I looked it up, whether or not they thought it was bullish or bearish. But this is one that if you're going to invest in something like this, you dollar cost average into it, and you dollar cost average into it every week or every month or every 6 months or 3 months, whatever your investment timeline is. You just dump money into it, whatever the share price is. I'm buying 5 shares if I can afford it. I'm buying 3 shares if I can afford it. I'm buying 6 shares whenever I can afford it. You're just dollar cost averaging into it every time you get paid, $100, $120, $50. You can buy fractional shares on most platforms out there. Again, if you want to use my Webull link down below, you can buy fractional shares from Webull. Just set the dollar amount and it'll buy whatever that is, even if it's a fractional share. But SCHD, so let's look at this one again. 52-week low, as low as $65.96, as high as $81 and a penny. Net assets is $44.61 billion, right? PE ratio is not applicable, not in ETFs. The dividend yield is nice at 3.39%, and its return so far this year is 1.09. Beta of 0.89, so it is less volatile than the overall market, right? Beta here. And its expense ratio is pretty low at 0.06, but you are paying 0.06%, right? So you are going to pay someone else to manage this. Now, a couple other things on this one. Payout ratio is less than 50%, 44.96, and it has a nice dividend growth, double-digit dividend growth of 13.90. Its last ex-dividend was December 7th. Its record date was 8. The payout date was December 12th. So if you bought them now, you would be in line for their next dividend. Do they say when the next payout is? No, they don't give you that information. Well, you'll have to look that up for yourself. I did not pull that in. I guess I should have looked that up. But SCHD, there is an ETF for those of you who are looking for I want to buy something and not have to go do any research or do much research along the way. I can just set it and forget it. This is an ETF that I would recommend. VOO is another one, VOO. You can look that one up as well. That is the S&P 500. It does have a lower dividend yield, but it covers the entire S&P 500. But same thing, if you wanted to create a portfolio yourself and do the research, if you're going to take the time to do the research on the stocks, then I would recommend you look at ETFs like this that you do. Maybe you like SCHD, maybe you like VOO. You can look at their top 10 holdings, top 25 holdings, and you could do a portfolio based on that and be like, okay, I can match what VOO is doing, or I can match what SCHD is doing, and then I don't pay the 0.06% fee, and I manage it myself. That's the role I take. That's why I named my channel Vested Interest, because you have a vested interest in taking control of your financial future. Well, that is really it. Those are the 5 stocks I'm looking to buy for the month of February. Let me know what stocks you are looking at. Let me know what you did in your portfolio this week. How is everything going with you? I would love to hear that. Drop it down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Hopefully you are on your own journey as well. Now, drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. Last, before I'll go, I will remind you that this week the Fed will announce how high they're going to raise rates. I think most people are expecting a 0.25 to 0.50% point rate, or a rate hike, I mean. So that would be, I think, February 1st. And then we have the jobs report on Friday. So those 2 bits of information will move the markets either positively or negatively. I think a lot of people are pricing in a 0.25% rate hike. I think if they raise it by 0.5, you might see the market turn red, right? Go down. And I think if they do raise it 0.25, that's already priced in, you may see the market rally or continue to rally. And if the jobs report is good, I think that's a negative sign. If the jobs report is bad, it shows that jobs are slowing down and that the Fed might start tapering off rate hikes in the future. So I know that doesn't sound right, but that's exactly what they're looking for. They're looking for job growth to slow to help fight inflation, right? And that's the idea behind raising the rates as well. So rates are going to go up, whether it's either going to be a 0.25 or a 0.50% hike, or if they go higher than that, then the market will freak smooth out, I'm sure. But I don't expect it to be more than 0.50. I think it's probably 0.50, and the market probably will drop initially. But with that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, and investing is for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.